Okay, we are live. Here we go. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. Now, there were no Monday blues in the stock market today. Instead, stocks were generally covered in green as market participants succeeded in maintaining the momentum of Friday's late rebound effort. JP Morgan Chase, ticker symbol JPM. That's the first company we're going to look at. They had a supportive role in today's rebound effort. But first, before we dive into the quick take on the market, just a quick reminder recap. The first part of this live stream is a recap on what happened today, why it happened, and what to look forward to the rest of this week. And the second part of this video is to answer your question. So if you do have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. All right, now that we have that all wrapped up and on point, let's look at JP Morgan Chase real quick. JPM is the ticker symbol. And remember, you can follow along at home on all the charting. There is a link in the description to a free account on TradingView. Tap the link, sign up, free account, doesn't cost a penny, and you can look at these charts too. Okay, JP Morgan Chase today, big bounce from a major bank. 6.19% up today. It's up 0.2% in the after hours. Big bounce from a really big low. Why? Because JP Morgan reported that they are raising its interest income outlook. Yeah. Is that just word salad, or is that something real, right? They're raising their net interest income outlook. So they think they're going to make more money this year. And it's one of the ways to judge the performance of a bank, right? Because it's the money they lend out, they need to make money off of that. So the interest they charge on the money they lend out, that's where their income comes from. And it's one of the best ways to judge a bank's performance. We also had a report that Broadcom, ticker symbol is AVGO. Look at them. They're not going to be so happy here. They were down 3.1% today, Broadcom. They're up a little bit at 0.1% in the after hours. Why did they fall today? Why did Broadcom fall? Because Broadcom is in talks to acquire VMware. Ticker symbol VMW. VMW. Now, investors liked this news because VMware shot up 24.7%, and they're up another almost 1% in the after hours, so $120.40 a share. Now, the deal would be a cash and stock deal, which typically signifies that they are pretty confident that they're going to find synergies between the two companies and that they're going to be able to turn around this investment and make a profit, right? Okay. And an acknowledgement, and this is all kind of going together with JP Morgan Chase, the potential acquisition of VMware, and then an acknowledgement by President Biden that he is considering lifting some Chinese tariffs to help ease inflation pressures, which all three of these things played a supportive role in today's rebound-minded trade. Now, the featured performer today, however, okay, let's go to SPX. That's the ticker symbol that I use for the S&P 500. The featured performer today was the stock market's prior performance, which is to say that market participants subscribed to the notion that recent selling activity had just gotten overdone. It went too far. And that did lead to the indices ripe for a rebound campaign. Now, if we look at the S&P 500, I'm going to take volume off the chart, gone. I'm going to remove the Bollinger Bands, gone, so we can get a clearer identity here for what's happening. So on Friday, remember, I'm going to go to the 5-minute chart too, just to refresh all of our memories. I need to put volume back up here for just a quick moment to identify the 2 days. Okay, and then volume will go away. All right, so on Friday, we had a gap up in the morning and then a big sell-off Friday. And then it was like the last hour of the day we had this big rebound. It's what is right in the middle of your screen. This big, all these green candles in a row. Each one represents 5 minutes. Then we get to the end of Friday, right? We're still down for the week, and the market is nearly, the S&P 500 that is nearly in bear market territory. It actually dipped to bear market territory when it fell here on Friday before its late afternoon rebound. And bear market territory is once you are down 20% from a recent high. So the recent high for the S&P 500 would be the high, all-time high, reached on the close of January the 3rd. So here we go, this big rebound in Friday afternoon. We get a gap up this morning in the stock market for Monday. It kind of sells off a little bit the first hour of trading, and then, you know what? Everyone just came together and said, this market needs to go higher. We need to rebound some of our losses, recoup some of our losses, or at least make a gain on a few trades, right? So that's what the market collectively did today, right? So you can see this morning after about 10 o'clock a.m., the market rallied and it reached its high for the day. And then it kind of double tapped that high again later on in the afternoon. And then here we are closing a little bit lower, not quite at today's high. Now, I'm going to go back to the daily chart because I want to show you here on the S&P 500. So this red circle right here on the bottom of this candle wick, this is when the S&P 500 dipped below that 20% on Friday. And then it rebounded into the close. And then today we get this nice big green candle, the S&P 500 up 1.86% on the day. But I want to point something out here. Right here, about 4,000 points for the S&P 500. This is where we may find our first bit of trouble in this rebound. Because even though I cited a couple of supporting factors for today's rally, the overall business environment will not hold this rally up. This is a short-term rally like we get nearly every week, right? If we look at last week, there were several days where we had green candles. Go back to the week before, several days where we had green candles. But for the week, we're still down, 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 down. And if I look at the weekly chart for the S&P 500, going to the 1 week, you can see that over the past 1, 2, 3, 4, 5, 6, 7 weeks in a row, we've been red and down. And I don't think the pain is over yet. We have not found the bottom of this market yet. I could easily see at least another 10% going lower from Friday's lows, okay? So that's a night like 30% down. If you notice here, there are 2 other yellow boxes that I have put here on the screen. They're new. They were added maybe Friday or maybe on Saturday. I did this when I was researching. These are different levels for the S&P 500 where I think we're going. I think the S&P 500, once it breaks this 20% mark, and I don't want to doom and gloom and FUD today's rally. Today's rally was great, and I'm glad it happened. But we need to be realistic, remember? The best investors are realist investors, right? We're realistic. We're not too excited. We're not too pessimistic. We're in the middle. We understand what's happening. We look at the whole picture, not just bits and pieces of it that fit our view of what we think is going to happen. So today's rally, excellent. We needed it. We'll probably have another rally tomorrow. And it's possible we could get another rally later on this week. But the overall picture is still bearish. And this level down here, this yellow box, the first one, candles haven't touched it yet. It's nice and clean. It's down here right around 35 to 3,600. Okay. I think the S&P is going that far. It's going to fall that far. But let's just keep focused on today's rally. And then we'll talk about the potential move that we may make down that much lower. Okay, so we have this resistance right here, and it's a double resistance, right? We have this black line, and if I scroll out here just a little bit, remember this black line, I know these lines are hard to see with all these other candles and stuff on the page here, but this is one that lines up with these big lows that we had right above my head here in the first week of October. They also started as resistance over here in July of 21, then October, and then they line up perfectly with the low hit on February the 24th, and that was the second big low of the year. We had a big rebound off of it. And then when we get closer to the past week or two, you can see that the market's really bounced around this line. It's been resistance here on the 13th and on the 16th, a Friday and a Saturday, Friday and a Monday there. And it's been just a line that, there's some action happening here on this line. And then we also have this purple line coming down here. This is the big resistance for the market. And I need to extend this line down a little bit further, because if we're going to have an extended rally, this is the line that needs to be broken right here. If you see, it starts back here on April the 21st, and then we hit it on May the 4th, and we get rejected and fall on May the 5th. And then we go up to it on May the 17th, get rejected, and then May the 18th, we fall off of it. And every time we have fallen off of this resistance line, we've had pretty big falls, right? If we look at the fall that occurred on May the 18th, that was a 4% drop. Going back to May the 5th, that was a 3.5% drop. And then April the 21st, that was a 1.5% drop. So each drop is getting worse as it goes, which isn't a good sign for later on this week. Maybe we touch it tomorrow, and then Wednesday we fall. It's a possibility, and these are some things that we have to play around with and look at and observe, and they may be what's going to affect this market the most. That line right there, that line in the sand. So we could see a little rebound tomorrow. If we break above either one of these resistance line, right? If we broke above both of them, that would show that this market really wants to go higher, and then we're probably getting closer to the next area of resistance, which would be right around 4,000 to 4,100. That would be the big one. So right now, we're looking at 4,000 even as big resistance for later this week. All right, continuing on. When we entered this morning, the NASDAQ itself, and then we pull the chart up here for the NASDAQ. The NASDAQ was in a bear market. It was down 20.1%, not since the beginning of this year, but since the end of March, it had dropped 20%. It's down 26.2% year to date. And on the NASDAQ, it also has this very strong resistance line that every time it has been hit too, we've had a rejection off of that line and the market sinks the following day. We're nowhere near that resistance line right now. We kind of stopped at Friday's high for the day, which is interesting to pay attention to. There may be something forming here. Now, the NASDAQ is in a falling wedge pattern. And if we zoom in here and look a little bit, today's high stopped right here at Friday's high as well. Now, this can go all the way up to maybe around 1,300. That would probably be a max for the NASDAQ. More likely 12,557 to get exact, but somewhere around there. That's strong resistance for the NASDAQ. So we can climb to that point. We can rally until that point. This rally could continue until that point. So I'm not trying to spread FUD. Realistic. Where's our limit? how far can we go? The overall market conditions haven't changed. Growth is slowing. The consumer is being weakened. Those are two big keys to what's going on in this market and how the market will react going further. Now, the S&P 500, if we just keep this in mind, since March, the Nasdaq's dropped 20%, the S&P 500 has dropped 13.9%, and the Dow Jones, well, it's fallen about 10% since March, and it is perfectly within this trading channel. It's a descending trading channel, which isn't good. And you can see its high today, it came close to that resistance, but it didn't quite touch it. But and it was up 2% today. It won't be able to go up 2% tomorrow without hitting this very strong resistance. What could we get tomorrow from the Dow? Well, if we look at where it closed today and just go to the top, just straight up to that line, we could maybe get 0.25%, and then we're at resistance. So the Dow, it doesn't have much wiggle room before it hits resistance. And you can see, going back to April 21st, it got rejected. May the 4th rejected, May the 5th a big sell-off. May the 17th rejected, and May the 18th a big sell-off. We didn't quite get to that line to be rejected. So keep this in mind, ladies and gentlemen, as we are going through this week in the market. Now, sure enough, today's market narrative included a contention that month-end rebalancing activity would go in favor of stocks. Now, we're not at month-end just yet, but we're in the home stretch and we're getting really close. So that view resonated as a factor behind the stock market's resilience to selling efforts today. And that's why we got that double top in the S&P 500 on the day and then closed near the high of the day. So looking at these charts, we're getting close. Nice rally today, but we're getting close to resistance. The Dow's got barely any wiggle room. Excuse me. The S&P 500 has got some. The Nasdaq's got quite a bit of wiggle room. And then if we throw in the Russell 2000, it was up 1% today. And if we go back and look at this line, which isn't as strong, the Russell 2000's got some wiggle room. But if we throw this trend line on here, just like this, and now let me scroll in here and look at it a little closer. This goes back to that April 21st. As you've seen through all the charts for the major indices, April 21st, we haven't been able to go back to it. Not to that high. And that was the start of the steep decline in all of the indices. And here we are. May the 4th rejected, May the 5th a big sell-off. Here, May the 17th, not quite there, kind of similar to where we are today for the Russell 2000. Not quite at resistance, but close enough. The 18th, we had a sell-off of 3.5%. We tried to bounce back, but the 19th was another sell-off. We're getting close to that resistance again for the Russell 2000. So just keep these all in mind as we're moving forward this week. Yes, we got a nice rebound today. It was broad-based. And actually, speaking about broad-based, buying interest seen today in the market, if you look at the Russell 3000 Value Index, it was up 1.5% today. That's the value index on the Russell 3000. If you look at the Russell 3000 Growth Index, it was up 1.5% today. That means among value and among growth, very broad-based rally today. Both value and growth rising 1.5%. that is pretty cool. Now, just a quick little plug here. If you'd like this valuable content every day before the market opens to help you along your investor journey, then come join us by clicking the first link in the description. Okay, all 11 S&P 500 sectors closed in positive territory today. The financial sector up 3.2%, bolstered by JP Morgan Chase's guidance and some value hunting, I believe, led the way. It was joined at the top of the performance list by energy, up 2.7%, information technology, up 2.4%, and consumer staples, up 2.1%. Now, the latter was perhaps the surest sign of the market's rebounded-minded bid today, considering that the consumer staples sector was one of last week's worst performing sectors. Something you have to keep an eye on, right? We don't just watch one particular sector. You watch all the other sectors as well, because if one is doing good, okay, one's doing good. But if you have 3, 4, 5, 10 all doing good, then you know you've got a broad-based rally or broad-based sell-off if they're doing bad. So keep those in mind. Now, the consumer discretionary sector, it barely had a gain today, 0.6%. It was by far the weakest today. Now, today's weakest sector, although it managed to recover from a 1.9% decline earlier in the day. So there's that to add. If we hop over to treasuries for just a moment, generally they tracked lower today as stock prices tracked higher in a curve steepening trade is what you would call it. Now the 2-year US02Y is the ticker that you use to look at the 2-year. It settled up 3 basis points today to 2.61, and it's slightly higher in the after hours. And you can see over the past week or two, it's kind of flattened out here, right? It's really just, let's see if I can pull this up right quick. Oh, where is it? Where did you go? All right, let's just go with this one right here. If we look over the past couple of weeks, I'm going to go back to April the 18th. We definitely have a bit of a resistance line at a resistance line here. And I got to pull this down a little bit more. Okay, just about got it. There we go. All right, so we've got pretty strong resistance here at, what would this be? This would be 2.854% resistance over the past couple of weeks. And then there's been support right around 2.51%. Past 2 weeks, it's just moving sideways, not really gaining or losing when we look at it like this, right? Okay, let's change. I don't want red because it's not really losing or gaining. It's flat. We can see that. So there's the 2-year. Now, the 10-year today, it ended 7 basis points at 2.86%. Now you can look at that US10Y. Let's see here. Don't worry, you're right. Twitter just tanked on earnings, dips on Tesla, Facebook, SoFi, and others. Snap did it too. Not Snap did it, not Twitter. Okay. Yeah. Unfortunately. What is your take on gold? Do you like GDX ETF? It seems to be in a sideways channel. Okay, I'll pop that up and look at those. All right, just about to wrap this up here. The 10-year 2.86, and it's flat in the after hours. It's not budging. Crude oil, it did rise just a little bit today, 0.2%. I think it's still at $110 a barrel. You can look at that, US and then oil as the ticker symbol to look at that. And I believe it's still at 110 a barrel. Yep, 110. It's in a trading channel of its own, rising up, but it's kind of been flat the past 3 sessions. It has not moved very much. So it's in the midst of its trading channel and it's ascending. So I don't like the looks of that. I wish this would come back down. That would be very helpful to us all, unless you're in the oil trade, that is. Another one oddity though in the oil market, and it's not oil, but natural gas today, it spiked almost 8%. That's a bit of an oddball, and I couldn't quite find any supporting evidence to why it spiked nearly 8% today. So that was something interesting. Getting off topic there. There was no big economic data today. Tomorrow, though, we'll get the preliminary IHS market manufacturing and services PMI for May. And then we get the new home sales report for April. I suspect that's going to be a bit lower. Oh, Zoom. ZM is the ticker symbol. Zoom reported earnings after the bell, and surprise, surprise, it's up 6.2%. The numbers actually looked pretty decent for Zoom. Hold on, I've got it written down here right quick. Let me just run through this right quick. Okay, so the Q1 earnings for Zoom, EPS of $1.03, and that beat by 16 cents on revenue of 1.07 billion, and that was an 11.9% year-over-year gain, and that was basically flat in line. And then a couple of the other points within their earnings, they issued guidance that was on the upside for Q2. They think EPS should be around 90 to 92 cents a share. They had approximately 198,900 enterprise customers, and that was up 24% year over year. And their trailing 12-month net dollar expansion rate for enterprise customers was actually up 123%. Now, with this news, I did notice before the live stream that DocuSign was up slightly off of Zoom's earnings report as well. And then another one that I follow that was up, that reported earnings in the after hours was Advanced Auto, AAP. There we go. AAP is the ticker. They missed by 2 cents a share. I think I can pull it up right here. Yeah, missed by 2 cents a share. Revenue came in missing by 14 million, 0.5%, basically flat in line. So not so good. I expect that from Advanced Auto. Inflation, it's a big problem. And comparable between last year and this year was only about 0.5% increase. For their guidance, it was basically flat in line. So this wouldn't be a good trade for this year with inflation being so bad. A couple earnings of note that do come out tomorrow to pay attention to. Intuit, ticker symbol INTU. I like that company, INTU as the ticker. It's great for small businesses, and it can handle all the kind of finances, payroll, and such for small businesses. Let's see here. For EPS, they're expecting $7.54 on $5.5 billion of revenue. Best Buy comes out tomorrow. AutoZone comes out tomorrow. But just like Advanced Auto Parts that reported today, I don't expect much from AutoZone. But Best Buy tomorrow, I'll be curious. With all these retail stores being hit so hard, I wonder how Best Buy does, because it's not selling clothing or groceries or anything like that. It's more of computers and smartphones and tablets and so forth, TVs, refrigerators. So I'm curious how Best Buy is affected compared to these other retail, right? And we also get Ralph Lauren and Nordstrom's reporting tomorrow too. I suspect that with the rest of retail kind of crumbling, that they may as well crumble too tomorrow. So keep those, watch them, see what happens. Oh, there was some news about Airbnb today. They're going to shut down their domestic units in China. The move didn't seem to shake the stock. ABNB is the ticker symbol. When the news broke, the stock didn't really move much. It was up. Well, I guess the news is traveling a little bit now. 0.65% is what it was up during the regular session. But in after hours, it's down 2.9%. So I think the news is finally traveling and catching up with people. However, I made a video about this news. It's coming out a little bit later, standalone video. China only represented about 1% of their recent past few quarters in revenue. So it's not that big, and they're not, Airbnb wasn't seeing a lot of travel into China, but there was travel out of China, and that travel still checks. Anyone going from China to someplace else, they can still use Airbnb like normal. It's just going into China is what they're stopping. I don't think it is a big deal. It does, 1% of revenue, sure. That can be a big deal when you bring in, a lot of revenue. But 1%, I don't know. But look for that video coming out. I dive into this topic here and break down the dollar amounts and what it's about for Airbnb to give some more clarity on it. Okay, let's see here. The gold one, GDX ETF. Now, gold, and actually, before I look at the ETF, let's go to gold. Just spell gold out, GOLD. That's the best place to look at gold. The gold trade has been getting a little more steam the past few days. Now, gold was a big trade at the beginning of the year. You can see this. Let me back up here a little bit. It was in this trading channel, ascending trading channel, that started back in September of 21. And it ran. You can see this one bump right here where it popped out of that trading channel pretty significantly. But then it just continued moving up and to the right within its channel. And then it had this big run up at the beginning of this year. And it peaked at the beginning of March. And since then, it's had trouble finding its footing. However, this is the interesting part. This trading channel that it was in, going back to September of 21, it is now just getting back to that point of being in that trading channel. So it closed today in the trading channel, which is a good thing for gold. If it can stay in this trading channel, that would be a good thing for gold. And let me just get this so you can see a little better. Today's candle, it closed above this line right here. And that's what we want to see. And the top of the trading channel would be all the way up here. So we want to see gold get back into this trading channel, stay in it, and ascend higher. That would be the ideal situation for gold. Factors that could lead or support gold rising is obviously inflation remaining high. I don't know what to believe about what the president said today, but the president said something about if Taiwan is invaded by China, that the U.S. would send our military to support Taiwan. That would just be a huge mess if that did occur. That is something that would spike gold. And that's part of the reason why we saw this big spike in gold earlier in this year, because of Russia and Ukraine. That sent gold up. So any geopolitical tensions or war breaking out, that definitely sends gold up big time. But right now, gold was in this dip. It was trying to stay above this the support area within the trading channel on May 10th, on May 11th, and May 12th. Finally, it dropped and dipped below it, big time below it. But it found support right here. What is this? 18.15 an ounce. It pulled itself together and it started rallying again. It's been green for the past 4 sessions. And again, now that it's back in that trading channel, I want to see it stay in that trading channel. Even if it's just kind of moving sideways over the next couple of days, it's got to stay in it. Close above this support line. And right now, that line is about 18.50. So 18.50 an ounce. Okay, now that I talked about gold itself, let's look at GDX, was it? And I'll do this too. Okay, so on GDX, I mean, you can see kind of the same pattern for gold, except it's not as ascending, right? When we look at the trading channel for Van Erickson Gold Miners ETF, it really just moved sideways. We look at this area right here, where gold itself was actually ascending during this period. Here, we're moving sideways, trading sideways. Not the best. And then, of course, we get to February, Russia, Ukraine, it spikes, but then it sells off harder than gold sold off. And it's just now getting kind of finding its footing, and it's back into this trading channel, even though I think it's just going to move sideways, just like it did right here. This would start back in October of 21, going through February of 22. I think that this ETF is going to end up doing the same thing and just move sideways to fill in this space right here. That's what I would think. Because gold right now is having a problem at its support line. If gold can close above it, and watching gold can help you to know whether the Van Erik Gold Miners ETF is going to move, right? So keep an eye on gold. I don't think this is going to do much because gold right now itself is struggling. It needs some sort of a catalyst to get it moving again. But if gold breaks down and it doesn't hold its support, then you'll probably see this do the same thing as it did back here. It's going to stay low. And actually, if we put a line, let's do this. The line at the end of last year, beginning of this year, it looks like it's right around 31.87, give or take. A lot of resistance at that mark. So watch that line. You'd want this ETF to stay above that 31.87, 31.50. Make it easy to remember. In TradingView, you can mark it when you're over here to the right-hand side where the prices are. You get a little plus symbol. just click that plus symbol, and then you can actually add an alert if you want to get alerted for if it crosses that point, or draw horizontal line to kind of mark it so you can keep an eye on that level. Just something helpful to do. But I don't expect this to be a big mover. I don't think it's gonna, rally hard. I think it's gonna get caught up and start moving sideways. And if I go out a little bit bigger on this, I mean, you can see it's got its ups and downs, but for the most part, it's been moving sideways. I mean, we could really go back to December of 2020. Even though it had its one spike, it's one big spike out of that, if we just continue this line across, I mean, the support is staying pretty consistent, right about 30.50. A couple times it's dipped out of that, but whenever it's dipped below that 30.50 support area, it's snapped right back up. So that could be a good area of buying. Whenever this ETF dips below $30.50, small positions, because you can see here it got to that point. These circles aren't very good. Did it again there, and a third time right here. When it dips below $30.50 a share, it typically snaps back right above that support line. So that could be an area of interest. One of the reasons why I brought the chart out a little bit bigger here is there's these ascending lines here, right? So if we look back here, no, my head's not blocking it. If we look back here, this is really when that started, right back here, August in 2018. And it had this area of support as it was marching higher. And if we follow that line, we had a lot of reactions along that line. That's where the line is today if we match it up there. Now, if I zoom in here a little bit, I know it's starting to get sloppy with all these different marks on here. For this ETF to get back on track, it's really got to get above, let's see, let's call this 34.50. It's marching that way right now, but I don't see any big time catalyst within the next week or two that could move this up. Now, just so you know, I'm not always right, but I try to back it up with whatever facts or supporting pieces of the economy that I can use or not in support of. Now, if gasoline, diesel, if the price of that continues going up, if there's shortages of gas or diesel, we've got the baby formula problem. If food shortages become a problem with food prices already being inflated, those could be catalysts to move gold higher, because gold is always a sense of safety in times of trouble, right? So if we get something of that nature, then that could push gold and be a little bit of a catalyst for it. All right, let's see here. All right, so yeah, when Snap reported, did they say they had any more trouble with the Apple privacy? I'm sure it did. Let's see here. How far did they go down? Oh my gosh. 30.5%. It has fallen in the after hours. Yeah, these, oh man. Man, oh man. This is just like back here. When was this? October, when it had this big plunge. Um, just for an idea, this is where Snap is trading at right now, where this red line is. Up here is where it closed. Big, 30.5%. Wow. It's now a $15 stock. You have to go all the way back to May of 2020 to find this thing at $15. Wow. You know, there was this theory that I came across today that talked about the pandemic. So 2020, most of 2021 being an oddball, an oddity. And in this theory, they were saying that the market is going to go back to just slightly above 2019 levels. So right here, oops, that's not what I wanted. I want my pen. There we go. So right before the crash of 2020, this theory suggested that that's where the market is headed, because they're in their theory, and I don't have the details hammered out, but they're basically saying that everything that has happened since then, at least through some point of 2021, is all being washed out now because of all the money printing, the quantitative easing that was done in the economy. That money printing, all that liquidity in the market, that liquidity is being sucked out of the market with quantitative tightening, which the Fed is doing, with interest rates going up, which creates a tighter liquidity pool, right? So that's what the argument is based around: liquidity being taken out of the market and it being artificially put into the market during 2020 and most of 2021. And that's why they believe in their theory that the market is going back down to pre-pandemic levels. It was a very interesting and thought-provoking article. I'll have to find it and share it with you guys. Okay, let's see here. Let's hop over to Facebook. Facebook at 181. Down 8.5%. Yeah, that Snap news isn't going to be good for Facebook either. So it's down here. So right before earnings came out, Facebook got to 179.50, and it's at 179.60 right now. That seems to be an area. And, you know, look at this. When we go back to find this area, and let me just put a line here. Oh, yep, another blue line. That's all I need. I got so many already. I'll change the color. But if we go to where Facebook is at right now, this 179.60, I'll put a line, I'll change the color. This kind of fits into that dude's theory about where the market is headed. I'll put a red line there. Because if we go back, look at 2019. This 179 was support for Facebook back in 2019. Oh, man, what a coincidence. Maybe the market is going back to 2019 levels. Wow. I'd be curious to see how Facebook can hold up at this 179 area, because that was support all through August of 2019. It was support through September, October of 2019. Wow. Didn't catch the details, but Facebook is super red and wanting me to buy it. Yeah, Facebook has become a future play. It's like everything Facebook has done up until this point has all been accounted for, and you made your money for. Investing in Facebook right now, I don't think is about what Facebook is producing right now. I think you're investing in Facebook for its next phase, the metaverse, right? Virtual reality. It's that future in which you're investing today to be rewarded for in the future when those projects become reality and mainstream. So that's interesting. That 2019 thing, that really interesting. All right, let's see here. Any other questions? Anything else you want to dive into? Metaverse with a decent fallback business. Yeah. Facebook will always have its advertising business. The advertising business will evolve to include the metaverse. So yeah, I mean, I just think in the future, Facebook is only going to be higher, go higher. It's almost like the where Facebook is at right now is like it's a startup again, and you're investing at the beginning of that S curve before its products are fully flushed out and mainstream. If we're using that one theory about going back to 2019 levels, then if I zoom in here, this low here on October 2nd of 2019 was 173. This low was 176. And then we have another one here getting lower, 161. All two of them got as low as their simple 200-day moving average and bounced off of that. Can't use that as a judge right now because the 200-day moving average is so far above it. I just find that 2019 thing all spooky now. Could it really be? Could the markets be going back to 2019? That would be crazy. Okay, let's see here. Please don't look at Tesla. Tesla. Yeah. Maybe it's just Facebook being spooky. Man. Wow. You know, I think 550 is a good area of support for Tesla. And, you know, if we go find 2019, okay, let's see here. That's 2020. All right, there we go. Here, 2019. $100 a share. I don't think Tesla's going that low. Oh my gosh, that would be so scary if it did. But no, I think 550 is a great area of support for Tesla. And I can see it going there right now. I believe that's where it's going. That's why on Friday when it dipped, I nibbled just to add some more shares, but I'm really waiting for that 550. That's what I'm waiting for. to go in a little heavier and not just nibble. Because I do think Tesla is definitely a future company that's going to be a multi-trillion-dollar company. Oh, man. All right. Well, I think that wraps up. So Snap lowered their guidance. It looks like here. Snap down after hour, lowered guidance. They're dragging down others. Pinterest is down 12%. The Trade Desk down 8%. Facebook, that was down. Roku's down 5%. Google is down 4%. Twitter's down 4%. So Twitter here down 3, call it 4% in the after hours. You know, Twitter is still, I think, if you believe that the deal with Elon buying Twitter is good, it's going to happen, it's going to go through. I mean, goodness, I think this is a good steal right here. Twitter right now at its current price, and then going up to 54.20. Oh my gosh, that's a 49% gain. I mean, you would have to wait until October, so there's opportunity costs to consider. But if you think the deal is going to go through, getting in on Twitter right now, that's a 49% gain. That's just nearly too good to pass up on, at least for a few shares to lock in, forget about. But if the deal does not go through, that's the other kicker. Twitter's going to sink, and it's going to fall like a rock. Its 52-week low is 31.30, and that was set on February the 24th, just this year. So if the deal doesn't go through, that Twitter is sinking. But if not, I mean, right now that's a 49% gain-ish for Twitter there. Okay. So that looks like everything that I want to go over. I have a video putting together on EA as well, just to kind of talk about what kind of companies could be interesting for EA. Disney is an interesting one. I don't know if Take-Two would be willing to go take a bite out of it because they just finished their acquisition. Activision Blizzard being bought by Microsoft, so I don't think Microsoft would go after it because Microsoft is tied up right now. But you never know. Disney is, I think, one of the most interesting possibilities. So right now, EA, and let me pull them up on the screen. They are currently, let's see here. They are currently their PE ratio is below the 2020 low. So it's kind of like back to its 2019 levels. Oh my goodness. All right. All right, well, I'll wrap this live stream up here today. Some standalone videos are coming out. And remember, we've started to do pre-market content, but it's in written form on Patreon. Kind of trying to figure out maybe a midday breakdown. I don't know if those are as important or not as the pre-market breakdowns, but we're adding those to some other things that we're doing. So if you want this content in written form, head over to Patreon. It's the first link in the description. Join us over there. We're glad to have you. Every little bit helps. It keeps us motivated, keeps us wanting to do better and do more. I wish I had more time in the day so I could do more videos, but that's where we're at this point in time. But the future looks good. Looks good. All right, well, we'll wrap it up for today. I'll see you guys tomorrow after the market has closed. And that's it. All right, thank you for joining me today, and I'll see you in the next video.